hour and trying to get that promised conversation going with Rakshit Ranjan of Marcellus. Rakshit, season's greetings to you. Wish you a very happy new year to you and the entire team at Marcellus. And I was looking at the latest newsletter, which is all about, how to build a successful retailing business. And then Reema and I were just going through your portfolio holdings, and we focused on Trent. So, just tell us more, because I think in the last 6 months, you haven't added or subtracted too many stocks from the portfolio. Trent was an addition a couple of months back, and that seems to be doing really well for you. So what is it that you're looking at in terms of retailers and this company in specific as we look at 2024?
Sure. No, thank you. Season's greeting to everyone in CNBC as well. Thanks for having me here. So Trent, to begin with, it wasn't actually a couple of months ago. We actually added it about little under 6 months ago, almost 6 months ago. Yeah, this is a company that we had been following for a few years. We did understand the sort of strengths of Westside in terms of procurement, in terms of the relevance of product, the merchandise. Towards the first half of 2023, what we started to realize was Westside itself was getting massively upgraded in its relevance of the merchandise. Today, when you go to a Westside store, it would certainly look very different from what it used to be 1.5 years back. More importantly, we started to appreciate how Zudio's expansion was being done in a manner which made it really sustainable and very, very profitable. So Westside and Zudio are joined at the hip in terms of procurement. Zudio and Star are joined at the hip in terms of leasing. I mean, Zudio was actually born out of Star in a way. So multiple kind of leverage opportunities have been capitalized on to build Zudio. And the way they're running the lease model, imagine the rate of store expansion here is exponential, to say the least, and it's not putting any strain on cash flows. So that was the convincing part. And then Star Bazaar, sure, I think, is something that was icing on the cake.
Absolutely. I have these outlets very close to where I stay, so I happen to see firsthand what's happening there, Rakshit. But, that brings me to a wider question. The market's narrative in the last 12 months has been that top end of consumption is booming. And we see that, the way DLF is selling out these big apartments and, what's happening with a lot of the other premium car launches for that matter. So top end is doing well and the bottom is kind of struggling. Or let's say, economy is kind of struggling. But Zudio turns that argument on its head. So then, does that lead you to look at perhaps other plays as well? Basically my question is, could this whole play the premium segment trade continue into 2024? Or is there a reason to look at the mass segment or the economy segment trades as well, whether it's consumer, FMCG, a lot of other companies?
Yeah, no, that's a very good question. So to begin with, I think Zudio is doing well more because of company-specific strengths rather than just being a beneficiary of the macro. Now, when it comes to the broader macro, you're right. Bottom of the pyramid consumption is significantly weaker than the premium and luxury consumption. I think on the home purchase piece, the DLF data point that you mentioned, it's quite interesting. Even at the bottom end of the pyramid, the middle class and lower customers, they have bought houses by the bucket loads, is what we are understanding. And they bought that by taking loans, and the government subsidy schemes on some of these loans are being lapped up very, very aggressively. Now, that's one of the reasons which actually might be putting a sort of a crunch on the wallet of these consumers. Once you've moved to low rental yields to high interest rates on home loans, your wallets do get compressed for a year or two. In terms of what the outlook for this is, one very big question is what kind of spending does the government do after these elections? If it is more capex, then probably this squeeze on the wallet share doesn't get short-term relief. But if there is more subsidy, there's more OPEX by the government, then there's a possibility of, in fact, a catalyst in terms of a relief. Otherwise, over a 1 to 2 year period, we do expect the bottom of the pyramid to also recover, if not much sooner. But yeah, it's quite interesting when you compare Titan and Trent both. right? And for disclaimer purposes, we are invested across both these stocks. When you compare Titan and Trent, Titan is at the top of the pyramid. Trent is somewhere in the middle or the bottom, and both are doing well. So yeah, I think company-specific stock picking in consumption matters far more. Nestle is doing well in FMCG. No other FMCG company we think is doing as well. By the way, again, disclaimer, we are holders of Nestle as well.
Quite incredible, right? Trent, you got in at 1,800 and now the stock is at over 3,000 and all in a span of less than 6 months. Rakshit, talk to us about your other fresh entry. You were telling us Astral. You all entered Astral in November of 2023. Now, what's the rationale behind it?
Yes, so Astral, we've been holding in some of our other portfolios for, I think, more than 3-4 years now. In the consistent compounders portfolio, we picked it up in November last year. The rationale is there are 2 or 3 things which have sort of added on to our understanding of Astral. One is beyond just pipes, the way they are expanding adhesives and the way they are allocating capital to go even beyond pipes and adhesives, right, into some of the faucets and some of the other smaller allocations that they've made. It's not being done in a way that would give you concerns on return on capital employed and the drag it might have in future. In fact, they are exploring optionalities, some of which might work out. Probably not all of them will work out, but whatever is working out will have a massive leverage on the established business of Astral. On top of it, there are a couple of things. I think in pipes, one of the other larger unlisted competitors is a massive opportunity to gain market share from, which we see from the ground level. And secondly, this whole sort of boom in purchase of new housing in India, new homes in India, not just the DLF type of premium properties, but even at the mid-level and the lower level ticket sizes, there's a massive boom. Housing finance data, I will tell you as well. This is being followed up with a very significant demand for home building materials. And no wonder, on the one hand, you've got FMCG undergoing a slowdown in volume growth rates, but most other home building materials companies, paints, adhesives, pipes, etc., the volume growth rates are pretty healthy for the last couple of years. So there's a resilience from the macro end, and there are some company-specific developments, which is why we've increased exposure here.
Okay. Thank you very much, Rakshit, for joining in. By the way, the news flash on your screen. If you remember, about 2 weeks back, there were reports that Polycab's offices, premises were searched by the Income Tax Department. In fact, pull up a 3-month chart and you would see even that day when the news flow broke about IT raids, the stock had come under pressure. There is a clarification now coming in. They're denying any, rumors, they're denying any tax evasion. There you have it. The first fall came sometime towards the end of December, about 2 weeks ago. And today, the stock is down 5%. But the company is saying they've not heard back from the IT department, and they're denying any talks about any reports about a possible tax evasion. Await more clarity on that. We'll get into a break. We'll come back with the markets on the other side.